So let's look at candlesticks now. It's super basic. What candlesticks are is they represent what the price does over a certain time or a certain whatever that candlestick chart tells us. Now we look at a tick chart, so our candles tell us what happened over the last 2,000 trades. For this candle right here, the market opened up here at whatever this price would be and then closed at this price. And so that's what the body of the candle tells you. And the green part tells you that it opened down here and closed up here. And then we have the high and the low. That tells us where the high and the low was of that trading range in that certain candle. And the same goes for the other side, or a red candle, except the open is up here and the close is down here. And the wicks tell us where the highs and lows are. Now, this is a super basic concept that most people already know, but one thing that people don't really think about is each of these candles have their own trend in them. So if we think about it, this candle here represents what happened over 2,000 trades. And so what does that mean? That means that if you broke down and if you printed each of those trades, it would show you a trend or almost a chart. And so what we can gather from these candlesticks is a mini trend. Each of these candles represents a trend on a mini time frame, right? And so think about if you blew up to a larger time frame, the candles we look at, they represent the trend on that time frame. And so if we look at this candle right here, right? What does this tell us? This tells us that the candle opened here. The price might have sold off all the way to the low here that we can see. And then it went up to the highs, topped out, and then closed here. And so that is a trend in its own. And so this is what we want to be aware of when we are looking at each candlestick, right? And so if we go on to this one right here, this candle in here, this is called a doji. And so this is just a really neutral candle, and the price hasn't really gone anywhere over the time frame, right? It opened here, maybe it traded up, maybe it traded down first, it made some kind of high, traded all the way down, and then ended up closing at the same price that it opened. And so for our purposes, that kind of shows a sideways trend. And we don't like trading in a sideways trend. We want to know where the trend is. And so this next candle over here, this is a really clear-cut example of this candle just opened here, and during that, the price pretty much sold off. The price could have been in a more movement like this, but it opened at the highs and closed at the lows. And so that represents a really strong downtrend. And so going forwards, these are things we want to be thinking about when we are looking at candles. And so as we've started to narrow down on how we enter in trades, right? Think about our first thing we looked at was, where is the overall trend of the market, right? We want to know if the overall trend is up. And so now when we enter a trade, we want to know that we have that overall upwards trend, but we also want to have a candlestick that is telling us that same story. And so we want everything to be in alignment. And so that's what we are looking at here. And so if we go on to this next slide, this is what we call the signal bar. And so this is the bar that we enter off of, or that signals our trade for us to get in. And so if we just take a quick look at this chart, right? Here's a high. We move down, right? Here, make one leg up and then make another leg down. So right here we have a two-legged pullback from a move up. And we're just gonna, for the sake of this trade, we're gonna assume that we are in an overall uptrend. And so now that we have our two-legged pullback, this is where we wanna buy in. We wanna buy in before we make that next move higher. And so that's what this bar right here is telling us. Because if we go back to how we count legs, a new leg higher is when it breaks above the high of our leg down. And so this bar right here, when it broke above here, that's a new leg. And so we want to be in the market when it does that. And so that is how we enter a trade. And so that's why this is called the signal bar. And this is the bar that puts us in the market. And so here for this two-legged pullback we have right here, right? This is the signal bar. And this is what tells us to get in. This is the final confirmation. We want this bar here to be a bullish bar if we are looking for a long trade. We want the trend of this signal bar here to be in alignment with the overall trend. Now with these signal bars, we want them to be in alignment with the direction of our trade, right? So if we have a new high here, here's one leg down, a pullback, and then a second leg down. So this is a two-legged pullback. And so what we want is we want our signal bar to be bullish because this is a long trade. We're looking for it to go to the long side. And so we want to make sure that this signal bar that we have is green and a bullish signal bar. So here we have that leg down, right? And so the moment it breaks above the bar, that's when we want to be in the trade, or that's when it signals the finish of that second leg pullback, and it's going to start continuing up. And so here you can see it breaks above here. And so this, because it breaks above here, and this is the finish of that leg, that means this candlestick right here is our signal bar. And you can see that if we're looking for a long trade here, this signal bar is really bearish and it's not a bullish signal bar. And so this is not a trade that we would take because this signal bar is red. And even though this bar right next to it was green, this is not a trade we would take because the trade would have been right when it broke above this. It wasn't when we wanted to get in. Now, even though this bar here next to it was really green, because it had already broken above this bar here, this was designated the signal bar because it broke above that. And so we can't change that. And so we have to skip this trade. And we will definitely get into this more as we get into actually executing trades and how we execute in those. Now, if we look at, here is a really strong list of what bullish candles look like. And so kind of from the left side to the right side at this top area, this is basically the strongest bull candle to more weaker bullish candle. But these are pretty much, this top row is all really solid signal bars. If you have any of these as your signal bars, that is a really good possible entry. And then down here at the bottom, these two right here are still really solid signal bars. But once we start to get in to where the little story of the signal bar is choppy like this, and then especially a doji here, it starts to get choppy and it doesn't align with what we're looking for. And then of course, once these signal bars start to look red, for a long trade, we would not want those. And then if we were taking a short trade, any of these green bullish bars would be a really bad signal bar because they would be against what we're looking for. And so here's two other cases here. Sometimes when you have a really small signal bar, let's say you had a really big red bearish bar right here, the market just sold off really hard. If you have a little green bar here that technically signaled you into a long, sometimes it's actually not good to take that trade because this will just be a little bit of a pullback before a big sell-off. So that's definitely something to keep in mind. If you have a tiny signal bar next to a huge red bar, sometimes it's worth skipping on that trade. And then as well, this bar right here, this is still a bullish bar. Even though the candlestick is actually red, think of the story that this tells, right? The candle opened here, it sold off, and then it recovered here and closed. And that is still showing us a bottoming pattern. If we're looking for, the overall market to do this and then go like this is still a good bottoming pattern. And so this is still a bullish signal bar that we are okay using for a long trade. Now, if we move over to bearish candles, it's pretty much the same thing, just flipped. And so all these are really strong signal bars for a short trade. They're really bad signal bars for a long trade. And the same with these two right here. And then once you kind of get into these, things are a little iffy. You really don't want to be taking these as a signal bar because they are just choppy and, again, they're against the trend. The same thing with a bullish candle, right? This is against if we're looking for a short trade, any type of these candles are against the trend we're looking for. And then of course, here's that example of that really small bar. If there was a really big run up and then you had a tiny little move here, if you tried to take a short on that, sometimes that's not a good signal bar because the market might just be pulling back a tiny bit because it just had a very large move up. Now, that's kind of an advanced concept, but I did want to just slip that in there. Now, and then of course we have this. This is a good bearish bar because again, it's showing you that the stock opened here, tried to move higher, and then sold off. And so that is still a good reversal candle. And so this is good to think about for every candle you think about, but the majority of this is for thinking about when we're looking at the signal bar. And we will definitely get into that a lot more when we actually look at entering trades and executing trades.